Well, for more on how that BP oil crisis is affecting energy prices, I'm joined by Jonathan Barratt from Commodity Broking Services. Jonathan Barratt, welcome to the program.
Good morning, Whitney.
So is the situation with BP having a negative impact on oil prices?
I think the situation with BP, it's having more of a negative effect on the share price. Oil prices in themselves are actually very buoyant at the moment, and we've just gone through the last couple of weeks of prices moving up through that US $75 a barrel, and we just hit that 76.15 just last night.
And we've seen, you mentioned the share price of BP there. Now, overnight we saw that the company has been downgraded by several ratings agencies. Would you say this is the beginning of the end for the company?
I'd say not really, no. I actually feel that what's occurred is that a lot of the governments have really not done the right thing, and also the companies, the oil miners, oil drillers have also not done the right thing. We as a global community have supported the production of oil, and as a result of that, miners are mining for it. I think really it's more of a concern that we haven't mandated the use of cleaner resources, 15 to 20 years ago. Accidents like this will occur, and they'll continue to occur.
It's interesting, though, because we have seen, the other energy giants like ExxonMobil go at great lengths to distance themselves from BP when, in fact, they've actually been guilty of the same sort of situations. Do you think, though, that the energy sector will fall out of favour for some time?
Oh, look, I don't think so. I mean, I think we've got so reliant on oil at the moment. And there was that concern when oil reached 147 that we had to find new resource. It's just so happened that the new resource was found in the deep wells that they were looking to get that resource from. And rather than actually looking at the cleaner alternatives, the natural gases, the ethanols and all those sorts of things. So they went for the easy option, both the governments and the big companies, and that was obviously the deep well mining. And obviously in this case we've neglected the safety part of it.
So you're expecting to see more of a push to natural gas and those sorts of alternative energy sources?
Yeah, we already have seen it, believe it or not. We've seen a very, very strong move in the natural gas market. Natural gas in itself has rallied close to 28% in the last month. And I think that's a direct result of a lot of the governments now turning the page and actually mandating the use of these cleaner resources. I mean, we don't really need to have deep water drilling for oil when we've got those alternatives already on hand.
All right, moving on to another big story, and that's the resources rent tax, or the super tax in Australia. Will that proposed super tax push commodity prices even higher? Some are saying it will.
Look, I think it's going to be a bit tricky because I think the government came out and they were quite aggressive towards putting it in play, and now we're hearing that putting the tax, or it's starting to be washed down a little bit. What I do feel that'll occur, it will support prices, will support commodity prices, but I think commodity prices will rally under their own steam, given the fact that we're going to pull out of a recession, and all signs at the moment, all economics are actually telling us that we're getting clear of a recession, and we'll actually be moving more into a growth phase. And as a result of that, we'll see commodity prices starting to rally.
All right, we're looking at some contract pricing forecasts for coking coal. Some say that it will continue to climb, but iron ore will fall slightly in the fourth quarter. What are your thoughts on that?
Well, I think it's going to be interesting to see, really, because obviously the major consumer is going to be China. And we did have a raft of very positive numbers that came out on Friday. And I think if China can continue to grow at a pace that doesn't spur those inflationary pushes, then we will see those prices paid for coking coal and iron ore to remain relatively well bid. The key, I'm afraid, is going to be China, and Australia will just flow with what China is doing.
All right, we're looking at copper before we go. Now, it's risen for a sixth straight session. Do you see it holding at these levels?
Yeah, I do, actually. I mean, we had some good numbers once again in the States in terms of manufacturing, and all these are suggesting that copper in itself has found a little bit of a floor. Remember, when people start to look at that recovery, they'll look at demand for the primary input, but as a result of that demand also, you'll find the US dollar will come under pressure like it did before. So you're going to have those two combined effects, the dollar weakening, general demand for the commodity actually pushing price, and as a result of that you'll see copper and the likes of others actually trade higher.
All right, Jonathan Barratt, always good to talk to you. We'll have to leave it there, but thanks for your time.